But if I told you as a beginner Forex trader there was a way for you to get your win rate to 80-90%, you're gonna start making real money in the Forex market and finally have the free time and live the luxury lifestyle that you've always dreamed about using this strategy. What's up and welcome back to my channel. So in today's video, I'm gonna be taking you guys through my winning strategy when it comes to using the Fibonacci Retracement tool. I've been using the Fibonacci Retracement tool and I currently still use it till date. If you haven't yet subscribed to my channel, go ahead and hit the subscribe button down below and turn on your post notifications so you never ever miss out on any of my weekly uploads. So I'm not going to make this intro lengthy. Let's just get right into this video. When you go ahead and Google the word Fibonacci, it's going to quickly come up with a definition of Fibonacci sequence as a sequence of numbers that sum up to the two preceding ones. It's basically a mathematical sequence of everything in the universe, and it's an infinite sequence of numbers starting from 0 to infinity. So you have 0, 1 plus 0 is going to give you 1, 1 plus 1 is going to give you 2, 2 plus 1 is going to give you 3, 3 plus 2 is going to give you 5, 5 plus 3 is going to give you 8, 8 plus 5 is going to give you 13. But on the Forex market, Fibonacci retracement tool is used to determine where price is most likely to pull back before it continues in its intended direction. The Fibonacci sequence ends up forming a spiral sequence that can be found when you look at flowers, shells. And fun fact, this was also used by the renowned artist Leonardo da Vinci to draw the Mona Lisa. Moving back to the charts, the Fibonacci retracement tool is made up of a number of extensions. This is the GBP NZD chart and we are currently on the 4-hour. So the Fibonacci retracement tool is located on your left hand side and you can go ahead and add it to your favorites bar so you can have it to use anytime you're ready. And as you can see, I have it as one of my favorite tools, which actually proves that I use it a lot in my trading because these are mostly the tools that I use on a day-to-day basis. I'm going to click on the Fibonacci retracement tool and click on the screen and drag it out towards the right and extend it, and all you're going to be able to see right now are these lines and numbers. This is not how you're going to see your Fibonacci retracement when you first open your trading view chart. This has been customized to my trading chart. Let me go ahead and show you guys the settings that I use. So some traders go ahead and customize this, but this is actually the exact settings that you're supposed to have for your trading view chart. So you can just screenshot this and implement it. So now moving on to how to use the Fibonacci retracement tool. The first thing we're going to do is identify the trend of the market. And as I mentioned previously, there is only 3 things that the Forex market is going to show you. It's either the market is trending upwards, downwards, or sideways. That is a bullish market, bearish market, or a ranging market. So the Fibonacci retracement tool should never be used in a continuation or a ranging market. It should only be used in a bullish or a bearish market. Once you've successfully identified the trend of the market, now we can move to the next step. So in a trending market, for instance, a bullish market or a market that is trending upwards, there are instances where we have a drop in price, and at this particular point of the drop, we as retail traders are looking for the lowest possible point where we can buy the market for the best price possible. Okay, and price usually does a 75% pullback before it continues back in its intended direction. That's the point we are looking to get into the market. And the area we are mostly looking at is the 0.618 and 0.786, where price mostly turns around and we refer to this area as the golden zone. The 0.618 is referred to as the most beautiful number in the universe. So when we are looking for an exit point, we mostly look at the minus 0.27 or the minus 0.18 point. Moving on to the live chart, we can see here that we have a ranging market. We also have a market trending bullish, all on the 4-hour. So currently on this side, we can see a bearish market. That is going to be our focus for today. This is where the Fibonacci retracement tool is likely not to work, but it's going to work on the bullish and the bearish market. So it's typically used by many traders. Once we've identified the bearish market, we're going to draw the Fibonacci retracement tool from the highest point, which is also referred to as the higher high, and we're going to end it at the most obvious lower low or lowest point, and we're going to drag it out onto the left. So the lowest point is going to be the 0 point, the highest point is going to be the 1 point. So as you can see, even though we have a bearish market, there was a continuation up until the point where we got to the 0, and then there was a pull back to the 0.618, and then there was the drop all the way down. So your entry point would have been the 0.618, and you're going to put your stop loss a little bit above the 0.786. So your take profit can either be on the minus 0.27 or minus 0.618. And this would have been a beautiful trade, giving you a 1 to 4 or 1 to 4.2 risk to reward. And you can be majorly successful using this strategy. But in my opinion, the Fibonacci retracement tool should not be used as a standalone strategy. You're going to need some form of confirmation to enter the trade and hold it for a longer point of time. And this is to help increase your accuracy and your psychology in trading. And one of the confirmations that you can look at are psychological levels. You can also use trend lines, candlestick formations, and also moving on a higher time frame to ensure that your trend is actually accurate, because looking at the market on a higher time frame increases your accuracy. So this is for the sell market. Let me do another example on a bullish market. And as you can see, you would have taken this trade and gotten yourself a whopping 4.5, almost 1:5 risk to reward, which is absolutely great. Now in other scenarios, you can see a significant move from the 0.5 level, which is also right, but it depends on how you've built your strategy. I might not take this trade because it's pushed from the 0.5. I'm always looking for it to push from the 0.618. The time frames that you should be looking at are the 4-hour, 1 hour, or the 15 minutes. These are the most accurate time frames that I've found using the Fibonacci retracement tool. Going on a lower time frame just confuses the whole thing. It tends to be a little too confusing, so I like to use it on a medium to higher time frames for maximum accuracy. I'm gonna recommend that you implement the Fibonacci retracement tool into your strategy and backtest it at least 100 to 200 times on a demo account before you move into using it on a live account. So you draw the Fibonacci retracement tool on those time frames that I initially mentioned, but you can drop down to the 5 minutes or 1 to 2 minutes to make sure that your entry criteria is accurate. I hope that makes sense. Always look to take a trade that is 1 to 2 or 1 to 3 risk to reward or higher. There are several more examples on this particular chart, but you can go ahead, just so this video is not too long, I'm going to leave it with these examples, but once you go and backtest and practice it out for yourself, you're going to be much more conversant with using the Fibonacci retracement tool. Now, when it comes to doing your backtesting, I have my Notion template linked in the description box down below, and this is what I use for my backtesting as well. So if you're interested, go ahead and click the link in my bio. If you use Notion, I'm sure you're going to find the Notion template extremely helpful. Now in my next video, I'm going to be showing you guys how to create your own trading plan. So go ahead and give it a thumbs up, share this video if you found it helpful, and I'll see you guys in my next video.